retires not merely as a billionaire, but as a builder of one of the most revered financial institutions in modern history, Berkshire Hathaway. The company's value has swelled to over $860 billion, with subsidiaries spanning insurance, railroads, food, energy, and technology. His personal fortune, over $130 billion at its peak, has become the byproduct of a life lived in relentless pursuit of rationality, discipline, and value. Yet for Buffett, the true success was never in the dollar amount. It was in the process, measured in decades of compounding wisdom, patient decision-making, and a quiet resistance to market hysteria. He did not rise to wealth on charisma or brute ambition, but on a set of foundational principles that rarely make headlines because they do not promise shortcuts.
If you are looking for an opportunity to own real assets that produce long-term.
As the curtain falls on his active leadership, the world peers into the archives of his life, not to count his riches, but to decode the way he thought, the way he chose, and the way he won. To understand Buffett's rise is to begin at the very opposite end, at a small town in Nebraska, long before he ever wrote his first annual letter. Warren Edward Buffett was born in Omaha, Nebraska, in 1930, in the thick of the Great Depression. His fascination with numbers began early. At age 6, he was reselling 6 packs of Coca-Cola for a profit. By 11, he had purchased his first stock, City Service Preferred, for $38 a share. When the price dipped to $27, he panicked and sold at $40. It later rose above $200. That lesson stayed with him for life. Emotions are the enemy of returns. Despite his precocious mind, Buffett's early journey was far from flawless. He was rejected by Harvard Business School. His first investments were often too focused on price over quality, what he would later describe as buying fair companies at wonderful prices instead of the opposite. Even his earliest partnerships were marked with caution and trial. The real change came not from a windfall, but from a teacher. Benjamin Graham, professor, investor, and author of The Intelligent Investor, would rewire Buffett's thinking and introduce the concept of intrinsic value. But even that was not the end of Buffett's evolution. The man he would become was forged over decades, not in any single moment of clarity, but through a disciplined loyalty to principle. It is within that loyalty that his true success was built. What follows are 6 of the most essential principles that Warren Buffett lived by, not just to build wealth,
Please pay
but to
attention.
build something much rarer, lasting, compounding significance. Warren Buffett's career is a case study in the discipline of duration. While most investors move in quarters, Buffett thinks in generations. His favorite holding period, as he often said, was forever. It was a principle grounded in the mathematics of compound interest, a force he called the 8th wonder of the world. Buffett's $1 billion stake in Coca-Cola, initiated in 1988, is one of the clearest expressions of this mindset. The company was already well established, but Buffett was not seeking thrills. He was looking for something durable. Over time, the dividends alone paid back more than his original investment, and the stake appreciated more than tenfold. The lesson: time is not the enemy of wealth. It is its partner. He resisted trends, bubbles, and noise. In the dot-com mania of the 1990s, Buffett was criticized for sitting on the sidelines. While others chased new tech IPOs, he doubled down on cash-generating consumer brands. To Buffett, success was not a sprint. It was a quiet, measured accumulation of small, right decisions made over very long periods. He didn't simply invest in businesses, he invested in time itself. Baseball analogies were a frequent part of Buffett's teachings, and one in particular stood out. The idea that investing is one of the few arenas in life where you don't get penalized for not swinging. He could watch opportunity after opportunity pass and wait patiently for the one pitch he understood, his circle of competence. This discipline to say no, and to do so often, set Buffett apart. In a world obsessed with busyness and action, Buffett built his success on selectivity. When he studied a company, he looked not for novelty or hype, but for clarity, predictability, and simplicity. If he didn't understand how a business made money, he walked away. If he didn't trust the management, he stayed out. If the valuation wasn't right, he waited. One of the most illustrative examples came with the airline industry. Buffett had previously been burned by airline stocks and famously avoided them for years, even as others jumped back in. It was only much later, when he felt the industry's dynamics had changed, that he re-entered. Though even then, he exited again before the COVID-19 crisis took hold. His restraint was not rooted in fear, but in conviction. He understood that avoiding mistakes was often more powerful than chasing brilliance. Success, to Buffett, wasn't about maximizing opportunity. It was about maximizing clarity.
Are you a trader?
Okay, so
You
now
need trading capital. And our funded trader
let's
program
pause
is
here.
for you. Yep.
Well, we'll have more of this. This has to do with the principle, the term principles of Buffett's principle of money, and he explained a lot of things. So now we're going to go straight to the market and looking at how to use our scanner effectively. Okay, and now I'm going to pause and ask questions one after the other, and then we will do the needful and give clarity today on our market. Okay, now it's very important because I know that you heard what I was saying is that it's not enough to have a scanner. It is not enough to have a scanner. It is important to know how to use it. Now, so the same thing you'll be complaining is not working for you, is working for somebody, and then probably you give excuses. And you never ask, what's going on? What's actually going wrong? Is it me? Is it the scanner? And I want to put to you today that we're told by some of our mentors, not noisemakers, because I'm not a hype promoters. I don't think about hypes. I think about longevity in whatever thing I do. I seek clarity in whatever thing I do. I love to. That's why sometimes I could be a little bit slow, and that doesn't matter. So most of the time, people come and ask me, "Oh, this thing is not working." Just like how many years I've been in crypto. Someone said I sold out the coin because they were crashing. I said, "Okay, congratulations." And you just listen to part of the thing the Buffett talked about and all of that. But there's something very significant I'm going to send on the group. If you're on our WhatsApp, on a general Telegram group, I'm going to send it. It's called the 6 Principles of Money by Warren Buffett. All right. And one of the first things he mentioned there was a very powerful one, was that he said, first of all, you need to learn how to protect the capital. Very powerful. And you see that in my trading approach, that's one of the things I adopted very long time. And I say trading, it's about 3 things. First, it's about how to preserve your capital. Your capital preservation is the first principle. You're first a risk manager before you're a trader. So many people don't pay attention on that. And so we'll let people understand that protecting capital is a fundamental thing. It doesn't matter what anyone is saying, because trading itself is what we call a financial investment vehicle. If you do understand that trading is an investment vehicle, you're going to be very rational in your trading approach. But if you do not understand that trading is an investment vehicle, you are going to be very rational in your trading. So you get, you get pushed up and down by hypes and what people are shouting about. And then, of course, after some time, you just find them not seeing them again. Okay. And so these are very fundamental things. So I think I'll send that thing to the group, which is going to help us. But remember, we're starting with questions, or you are going to be telling us. So if I read out those things Buffett say about Warren Buffett, 6 rules for money. Discipline builds empire. That's the title. And he said, number 1, don't lose capital. Rule, never lose money, and never forget this rule. That he talked about a lot of things around it. So that means once you start, you want to look at your capital. And I told Florent, I've been telling us many years back, if you have been following my training, I said, if I give you $500 and you are trading with it, and I give you 1 year to trade it, 12 calendar month, you trade it, and the second year you come back. I'm not asking you for profit. I'm asking you for the $500. Now, if you can give me that $500, I know the following year you're going to do well. Yes. Now, not giving me the $500 because after you blow one, you added another 500. If you check your account, ask yourself, many of us don't journal. We don't look at how far have been our success. We always measure our success about how much I've made. No, your success is that what's your level of discipline to handle the money? Now, many persons have funded their account 20 times by blowing up. You are not trading. You are a gambler. So, and then we're always in a haste. Right now, we have told a lot of people that, okay, what we created, let me just have to put this so that you can ask the question. Let me see if I can share the screen so that it will not be only me. So we learn from some things, okay? All right. So thank you. Can you see my screen quickly? If you can see my screen, just type 111 on the chat box. If you can see my screen, just type 111 on the chat box. If you can see my screen, the Telegram, and just send type 111 on the chat box quickly. Please, if you can see my screen, type 1111 on the chat box very quickly. All right. If you can see my screen, type 1111 on the chat box. If you can see my screen, can we make that very fast? Because we need to be interacting. Thank you very much. Only one person is seeing my screen too. Thank you very much. Okay, thank you very much. Okay, so we have seen. Now, I want to blow it out. Can you still see the screen? If yes, okay. Thank you very much. So the screen now, first of all, on the rule, you say don't lose capital. Now I've told, and you heard me say, if I give you, can you trade for 1 year, be making money, be losing money, be making money, be losing money, be making money, be losing money. At the end of the year, you didn't make profit, but is the capital there? Yes, you can start all over next year. That's the truth. But look at something. If you're trading, you lose money, you make money, you lose money, you make money, you lose money. Eventually, after 1 month, you have sold your fridge to deposit another money. Next 2 years, next 1 month or 2 months, you have sold even your car to fund. You are not trading, you are gambling. That's what Buffett is talking about. And I told you, I said 3 things about trading. If you don't understand the principle and work with it, it's going to be very difficult. Number 1 is called capital preservation. Number 2 is called securing profit. Number 3 is called trading with profit. So if you are trading and then you could hit the jackpot and then you just flip an account, you are trading with $500, you can make a trade that maybe by chance, a trade just go in your favor, pam. And then before you know, you did 50% of that $500. That means you have $250 as extra profit. If you don't know how to protect the $500 not to be tampered with and continue to trade with that $250, you will soon lose the $500. Then you borrow money. I'm speaking some of us challenge now. We borrow money, we do everything, and then we go back. If we go back, some persons, they started trading maybe forex or synthetic and all of that. They have crypto portfolios. They start deflating the portfolio every day, every time. You blow $20, you blow $30, you blow. Check your transaction. You will see that you have traded up to $2,000 capital, and none of them is available any longer. That's why I say slow is fast and fast is slow. You can see. So the second thing is say invest in what you understand. So that means there's a need to seek an understanding of what you are doing. Don't gamble. The number 3 is say the power of compounding. So if you cannot learn how to compound, meaning growing your wealth, is a big problem. Now we're going to discuss about this separately over time, just giving us a foundation. Number 3 is say be greedy when others are fearful. You hear when the story said he's not carried away by the noise. He stayed by his decision and clarity. It doesn't matter, let them call you Jews. You don't know anything, no problem. I always tell you that when I'm trading, one thing you must trust is your own analysis. Then number 5, he said, earn while you sleep. So that means there's a need for passive income system. So we're not going to talk about that today. Then there's a last point he made, the number 6. He said, learn every day. Okay, so can you see now? He said, learn every day. It's very, very important. So you can see that he understood when it is to actually build wealth beyond just like the noise we're making and all of that. So the first question I asked myself, am I actually building wealth? I'm just gambling, looking for a quick fix and all of that. So ladies and gentlemen, we're going to take it series by series. So every question asked by anyone, we tend to, I will start exposing us to how to use the scanner effectively from the experience some of you have blue, push here and there about the scanner. There's a scanner on your screen, and many had misunderstood it. And then instead to be making money, you are losing money. Now, of course, and I will clarify to you, what type of trader are you? They are very important. Well, one of the lovely things about this scanner is that it's not attached to one time frame. This is 1 hour time frame. If I go to daily time frame, it will still give you buy and sell entry. That's the lovely thing about the scanner. If you do not understand it, that's why knowledge is very important. You can see this is daily time frame. This is Bitcoin. Look at the sell here. So if you are working on daily time frame, perhaps you might have not found another entry to buy. That's the dynamics about the scanner. And I quickly want you to understand that irrespective of the instrument, irrespective of the time frame. So you want to scalp, you want to swing, you want to day trade and all of that. You want to intraday trade and all of that. In gold, in everything, in every instrument, commodity, US 30, NAS 100, currencies and all of that. Everything, it has opportunity for that. So you can look at it now, for instance, somebody who was working on daily time frame, that means since you enter sell since January, you have not done anything apart from the buy. You buy again in March. Are you getting it now? Now, you are probably going to miss this if you stay on daily time frame. That's why the dynamics of time frame, then the best time frame intermediately is the 4 hours. And then, so we're going to explain that. So it's very important. So I want to give clarity today, for every subscriber and to be subscribers on why is it that I'm losing trade? Why I'm still using this? Because you are not following the set principle, the set rule. Many people know when we sold this thing last 2 weeks or the other time when this sale happened, people were freaking, people were afraid, people were fidgeting and all of that while we're riding the market, or the people were following instructions. These are very, very vital. Then when you are using this scanner, it's not just gambling. It's not, this scanner was not programmed around MACD, moving average, RSI. No. All of those strategy or indicators, we call them pre-programmed. This is an AI flexible that moves with the market strength. So it's beyond just like indicator, pre-programmed both. That's why you lose a lot of money on pre-programmed both. This is a hybrid system that is dynamic and flexible with the market condition. These are the things you should understand. Okay, so very quickly, I'm going to give also, we take notes. So Precious, are you in? So let me see. Precious, are you in? So if you are in, let me see you. Precious, are you in? Yeah, Precious, you are in. Okay. So you're going to be taking note of every questions asked by everyone so that we attend to them one after the other. This is like a family activities. Okay. You understand? Precious. So please, and where is Nui? Where are you? Where are you, Nui? Nui, are you in? Okay. So Precious, you are in. Where is Nui? No, you are not in here. Okay. So Precious, take note. Every question asked, we're going to be attending to them to clarify a lot of things for people because we want to maximize this thing. We're entering a new week, and then we have to really take understanding so that we don't give the little we have to the market, but we give little and collect enough. Okay, that's the whole idea. And then, so, scripture say, even those that have the little, we will take from them and give to those that have more so that they can have abundance. So it's understanding that actually define those things. Okay, quickly. Now, you're going to put your hands. So we're starting from questions. Now, questions, Sally, those of you who have used the scanner, and then you tell us what's your encounter so that we can clarify you. Then those of you who have not used it, you are perceived. But I always tell people the worst ignorance is to reject something you do not know from afar. Is the worst ignorance. And at the same time, enemy of knowledge is knowledge. If you know too much, you will not make it. Money does not respect over intelligent. Yes. Money respects street smartness. People who are street smart are the one making money. Go and check. People are highly intelligent. That's what one of our mentors, Robert Kiyosaki, told you. He said, be a foolish or dummy person, but set up an organization and look for smart people or intelligent people to work for you. And that's what he has said. And you discover that over-intelligent people don't, I'm sorry, I'm not saying you should not be intelligent. I'm not saying you should not be clever, but go and look at it. Smart people make more money than over, knowledgeable people. That's why the enemy of knowledge is knowledge. If you know too much, you won't go far. Because there are some places that you are not supposed to ask too much. And I've said this time without number that if you wait to know everything before you do anything, if you wait to know everything before you do anything, you will lose many things. These are very important. So now, if you want to unmute yourself, so let me see your digital hands. Then some of your questions you can drop it on the chat. We will still attempt to read on the chat. So start dropping your questions on the chat. And then those of you who want to ask live questions, just put up your digital hands. Then we'll give you room to ask. Then Precious, take note of those questions so that we attend to those questions before we clarify everything around the scanner. Does that make sense? I do. I think it makes sense. Okay, so please, one after the other, can you put up your digital hand? You have a questions to ask. And some of you, thank you very much. Somebody have dropped questions on the chat right now. I want to know the confirmation before entering sell or buy. Thank you very much. So take note, Precious. That's a question there. Now, so more questions you can drop on the chat box because when we start, it's clarification we want to do. Okay. Now, somebody say, how do I know? Okay, talk about the confirmation before entry. Okay, now, any other question? Any other persons with your digital hands? Let us see your digital hands. You have questions to ask, all right? You have questions to ask. Put up your digital hands. Maybe you do not know how to type on the chat box and all of that. Or that is what more favorable for you. Please, let's do that because if you do not ask questions, it means you were not prepared. That's the truth. If you do not ask questions, it means you were not prepared because there is no how you wouldn't have questions. Because do you know why I'm saying that? Okay, thank you very much. I have seen okay, Razak, hands is up. And Joel, hand is up. Thank you very much. Any other person? Because when we close hands up, no room again, please. Because we want to be very orderly. So we have 2 persons hands up. All right, and we have some questions on the chat box very quickly. So we have 2 hands up, so take no pressure so that we'll take them one after the other. So number 1, Mr. Razak is there. Number 2, Mr. Joel is there. Next person, any other person? So we just give 1 minute more for your hands to be up. After that, please, if you put your hands up while we are explaining, we wouldn't give room for that. Thank you. Because we will tolerate discipline. Indiscipline is not allowed. Thank you very much. So any other question, any other person with digital hands? Okay, I've seen, okay, thank you very much. I've seen number 1, Razak, number 2, Joy, number 3, Aliyu, number 4, Super K. Okay, yes. So we have just 20 seconds to go of hands up. After that, close. So Precious, take note, we have 4 people hands up and we're going to be attending. We unmute them to ask their questions one after the other, okay? Now we have just 5 seconds to close that. Please take note. Your hands are up. After these 5 or 4 people, we wouldn't attend to you. Thank you very much. Don't call it to be strict too much, but a place where there is no rule is a state of anarchy. And the state of anarchy is where anything happens. And where anything happens, anything goes. And then it becomes a lawless society. So thank you very much. All right, close. No any other hands up. And then so that we can attend to them. Okay, Mr. Razak, you can unmute yourself and ask a question.
Okay, sir. Well done. Good afternoon, everybody. Hello, are you hearing me?
Yes, live and direct.
Okay, so I have 2 questions, but it's like number 1 has been pinned down. That is the confirmation rules thereabout. Then the second one is that if we can, from the scanners, I'm looking at it, I can see that the demarcation, maybe they are in zones. Okay. Is the digital and value are going to be given when any call is being made, maybe the stop loss and take profit in values, or one is going to take it from the zone like that. So that's the second question.
Okay. So Precious, take note of this question. If you want to write it, you have to write it. It's asking, are we going to be, when the signal is given, are we going to be seeing value, or we are just going to take it in that area of interest or focus, as it were? Okay. Now the next person is all right, the next person is Joel. So unmute yourself and ask your question.
Yes.
Thank you.
Good afternoon, sir.
God bless you, sir.
Good afternoon, everyone. Yes, my question is on the scanner.
Yes.
You will see some of the line like the green. You will see some of the line, they are not uniform. Some are thicker, some are lean, some are tiny. Even with the red line. I don't know
The implication.
What it's all about.
Okay. Thank you very much. Okay, that's your question.
That's my question.
All right.
Yes,
So
sir.
please, Precious, take note of that. He said that the lines, which is that that support and resistance or demand and supply, or what we call key zone. The key levels,
Yes.
why are some places thicker and some are thinner, both either the red or the, so whichever. So, but why is that the width of these lines? What does it mean? What's the implication of those areas? So take note of that. All right, thank you very much, Mr. Joel. All right, the next person is who's that? Okay. Okay, so the next person, unmute yourself and ask your question. Thank you. Yes. Unmute yourself and ask your question.
Good afternoon, everyone.
Good afternoon.
If mine is, I need a clarification, sir.
All right.
On a higher time frame, you see a bullish. You say the market going bullish. On a long time frame, you see a market going bearish.
Okay.
I've taken a trade on that basis, and the trade went against me. I didn't know what I did wrong.
Okay.
That's my clarification.
Okay. So, Precious, take note of that. Please, all these questions, we need to attend to them to clarify and to help a lot of people. So he said on this, he gets market on the higher time frame, and then on the lower time frame, it will be counter. So what's the problem? What am I doing wrong? So what should I do? All right. Now, the last person with hands up is Super K. Super K, unmute yourself and ask your question. Thank you very much.
Yeah, good afternoon, sir.
Good afternoon.
Yeah. All right. Thank you for this opportunity. Now, my question goes this way. Now, understanding that 4-hour time will actually drive the movement. I don't know if you're going to have time to clarify for us again how to really identify the flow for the day with that 4 hours, because I know when 4 hours is bullish, every other lower time frame should be going in that direction. And again, one more thing before I say I close. I discovered something that the market tend to be like bearish. Maybe 5 minutes was sell. There was a sell signal on 5 minutes. Now it came down to a zone, went back, began to, go up and down, consolidate. And someone else said, since the sell was still there, then we can sell down the next zone. But after some time,
yes,
and I discovered that a buy signal now came from the former place.
Yes.
So the person was angry that why they are shaking down, that this is not a lesson. That from my understanding, the sell signal was imminent. We were not saying, okay, let's follow it. Now we now saw a counter arrow.
A counter signal.
A counter signal. It's which should have given us before. And I said maybe this thing is telling us that don't sell low. It's like the buyers are actually taking over. I think that is the education I'm getting from that. The person who did this thing will know better. And that's why I'm bringing this question up. Thank you very much.
God bless you. All right, thank you very much. So now we're going to very quickly addressing those questions. And then I think all the questions asked almost align with the question on the chart. I want to know the confirmation before entering a sell or buy. So this is just aligned with all the questions that have been asked by various persons. So we're going to take the first question. Precious, can you read out the first question to us? I know this is very, very important for us. And that's why we say clarity is very important. Don't guess. We heard what Buffett was talking. He say it doesn't go with hype, it go with clarity. And that's one of the things you must do, especially when you are trading. Very, very important. Okay, so now, Precious, can you tell us, or if you want, you do want to type it, or you want to tell us, okay, so please, somebody say, sir, what is the duration for a signal before it expires? Okay, thank you very much. Okay, so yeah, so Precious, what's the first question? Can you tell us quickly so that we can attend to them, and then we now rationalize everything, and then so that people can be clarified on a lot of things that have been bothering them. Okay, so Precious, we are waiting for you, please. Okay, so question 1, I want to know the confirmation before entering sell or buy. Okay, was that the first question by the person who asked? I'm not talking about the chat because this one is still going to just ratify with all their questions they asked. The first man that spoke, was that the question he asked? The first man that asked a question, please just quickly type us that first question. The man that spoke. Okay, well, that was the question. Okay, thank you very much. Okay, thank you very much. Now let's go. I think this first question may answer a lot of questions. Okay? This first question may answer a lot of questions. Now, this is our scanner. And you heard me over time, if you have listened to me severally. And I said, this scanner you have, this PBX market scanner you have, this is the simplest out of all the scanners. But this is the most powerful out of all the scanners. Why do I call it powerful? When things are too complex, they are not as powerful as you think. When things are too simple, they are underrated, but they are very strong. Now, let's quickly look at it. First, how do I confirm is when to buy and when to sell? Now, I'm going to clear my screen and so that we can go together. I'm going to clear my screen so that we can go together. Even though this has been there on the document sent to us, but we understand that people hardly read, all right? We understand that people hardly read. That's one of the biggest challenge we have. Say anything you want to hide from a black man, put it in a book. We're in a hurry. Now let's quickly go. What is the confirmation? How do I confirm before entry? Our scanner was designed around 3 things. So quickly take note of this. Our scanner was designed around 3 things. And these 3 things are, our scanner is designed around 3 things. Number 1, price action. Number 2, liquidity concept. Number 3, smart money, which what they call SMC. So these are the 3 principles behind this scanner. So price action is the foundation of everything. No matter what you are trading, without understanding price action, you are wasting your time. So now, when should I confirm the entry of this scanner, irrespective, especially when you are lower time frame? When should I confirm? That's the first thing. Now, you confirm entry of this scanner on 2 major occasions, but the first occasion that is repeatable is called, you confirm this scanner to buy or to sell after the confirmation come. Please, everybody can unmute yourself. You can mute yourself so that you won't disturb us. Confirmation is after 3 candle close. Now, don't miss this. Not 3 red candles or 3 green candles. No, don't mistake this. 3 candle close. That's a confirmation. How does it mean? Now, I'm going to tell you about the anatomy of candlestick. Now, this is candlestick. It doesn't matter what's the color. That's the mistake a beginner have. The mistake the beginner said is that they thought that red color is what determines candle. No. Candles had what we call principle. What's the principle of candlestick? Very simple. Market, let's say market is coming from here. Okay, I think I'll be first. I want to presume that we are all adults, but we have to behave. So please mute your mic, everybody. It's very, very important. Okay, so that we can be in order. I may be forced to mute everybody. Okay, so now the anatomy of candlestick is this. The color of the candle does not matter. Where my candle open from and close is where matters. Now, candle is a 3-in-1 system. Every candle is a structure, and every candle has what we call contraction, expansion, and delivery, which in smart money they call it AMD, accumulation, manipulation, and distribution. So now this is a candlestick. So let's say I'm working on 5 minutes, 1 minute, 3 minutes, 15 minutes. Now this candle market was coming from down. So that means this candle you see, let me draw this line. So this candle you are seeing, when it opens, what it did was this. The candle, when it opens, is called contraction. Why is it a contraction? The new candle will open where the old one closes. So it will open as a contrasted candle. Then at the end of the day, what happened? It will first deceive you. It will do you Okocha. What does Okocha do? Leg over. It will dribble you. So where candle open and first go to, that's not where it's ultimately going to. It's deceptive. So it first go, that is, it first open accumulation and then expand into the opposite side and now deliver. So that is deception. So where you see the market open this way, the candle first open this way, all of a sudden it start doing this and now come down. It may even go massively as a bearish candle. Then all of a sudden it now close this way or perhaps this way. So that's why candle have this component. Candle has a body, candle has a wick or wicks because you have it up and down. So candle has high and candle has low. Then more complex, candle has body, candle has wicks, candle has open, candle has close, candle has high, candle has low. So you can see now complex, body, open, close, wick, high, low. They are not the same thing. But the major people pick is open, close, high, low. These are the four major things people pick. So now, since this candle opened this way, I've just shown you that this candle opened, it first went up and now closed down. If this candle opened and first went up and now closed down, now you can answer the question on the chart. What will you call the candle? Bearish or bullish, irrespective of the color? Quickly. The candle first opened. It went up first. Thank you very much. Bearish candle. Thank you very much. Because why? It opened here, it went up, and it closes here. Since it closed here, the new candle that is going to open, it will not open here because this is the stop. This is the place the candle stopped, where it closes. This is the low of this candle. Now, your scanner, there's a previous candle that probably may be somewhere here. So the previous candle that probably may be somewhere here. So that candle, okay, so let's take it this way, yeah. So this candle that probably was here was coming from somewhere. That means this candle was bullish and it closes here. This one come open here, went up and closes here. This is a bearish candle. Now, when this candle took over from the previous candle, remember I say every candle is a structure. Now, when it took over from the previous candle, your signal is here. He already told you PBS sniper sell. You are not selling. He's only telling you, I broke a structure, but I'm not able to make it to the next line. So it gives you an indication. Now, this one opens, and the moment this one opened, went up aggressively. You can see now, this one, as it opened and went up aggressively, he has broken this guy. But in breaking this, what is used in crossing above this is the wick of the candle, not the body. And that means immediately that signal will leave this one and jump to this because it goes with market price. Now, when it moves to this, it will now print the sell. Now, in printing the sell, that means this is a candle 1, closes, candle 2, closes. At this point, you have not entered. At this second point, which is the second candle close, and eventually it even went bearish. This candle was bullish, which is green. So you don't say 3 red candle or 3 green candle. No. 3 candle close. Now, when the second candle opens, it took out this. This is like what we call liquidity sweep because it didn't close above it. broke the structure, but it didn't close the body. As long as the body of the candle did not close above the high of the previous one, it's not a break of structure, it's a sweep of liquidity. So it has swept liquidity. That means it went higher than this. Your signal is on top of this candle. Now, the market now went and closed bearish. Now, a simple anatomy and arithmetic, whoever get this now, if you're a new person, if you get this question, I know what I'm going to do to you. With the little explanation I've done, when the new candle will open, where will it be opening from? Is it here? So let me label it very quickly. So is it here? 1. Okay. And 2. Okay, please, everybody. When the new candle will open, please type your answer. Is it 1 or 2 that it will open from? Okay. Yes. Give your answer. Give your answer. Is it 1 or 2 that it will open? Okay, I've seen a lot of people say 2. Me, it's 1. No, it's 1, I believe. Oh. No, all of you get it wrong. It's 1. Well, which kind 2? That means you are not learning. Is it 1 or 2? How come all of you are saying 2? You are just copying somebody? You will fail. Oh. The answer is 1. Okay, I'm waiting. Is it 2? 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 Or 1? Me, I say 1 now. Why are you typing 2? 2K. Where are you learning from? Thank you very much. You got it. Every new persons who say 2, that means you are learning. Now, Precious, write down all those people that say 2 and the new people, that are new people. Write, please put a paper. If you have a pen, please do a little for it. Just write scores and type 10. Just write 10 in the front of them that are new people. Okay. So just type 10. I think there are a few of them you will know. So there are a few of them. The OGs, don't write anything for the OGs. All the new people that say 2. So write score, write 10 in the front of their score. So let's go. Thank you very much. You've gotten it. The answer is correct. Is 2. Why is it 2? This candle was bullish. It went up here. It opened here. It closes here. This is high. This one definitely is going to open in this where this one closes. And it first went up, and that's why it closes down. New candle is going to open, then the new candle opens here. So that is 2. When it open here, so when the candle first open and it do like this, please answer everybody. What do I call it? Expansion. What do I call it? What does it do? When the candle just open like this, what does it do? Expansion. If it's expansion, just say yes. If it's not expansion, say no. Expansion, yes or 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 no. Yes. Expansion, yes or no. Expansion, yes or no. Expansion, yes or no. Expansion, yes or no. Very fast. Expansion, yes or no. Okay. Expansion, yes or no. 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 Enough. Precious, every new person's yeah, so I can see, yeah, somebody say yes. Expansion. I'm seeing expansion. Okay. So somebody Razak put 10 for him. Right? Put 10 for him. All right. Igor put 10 for him. Okay, let's go. It is not expansion, but contraction. As it first opens contraction, then it went up like this. This is delivery. Yes or no? Delivery, yes or no? Delivery, yes or no? Very fast. Delivery, yes or no? 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 Quickly. Delivery, yes or no? 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 Somebody say distribution. Yeah, distribution and delivery, they are the same. The person who say yes. The person who said yes. All right. The person who say yes, mark him wrong. The person who say no, get him right. So this is not delivery, this is expansion. After contraction, the next thing you have is expansion, which is deceptive. Now, so because the market, the candle opened and first went up, the next thing that's going to do is the delivery. So this is expansion, this is contraction, expansion, and delivery. Now, so that's why you see that the candle will now have body and the wick. So these candles you see here, this combination here, this is 3 candle close. The first candle, the second candle, which is this middle candle, will sweep or close, whichever one, above the previous one, and that's the center candle. So why you waited for this third candle is for the candle to now give you interpretation of what this man was saying. This one say sell, because your scanner say sniper sell or sniper PBS sells sniper sell. Now, the candle that follow it should carry the message that was sent by this one. So this candle supposed to do what? Number one, it shouldn't take out this. The moment this candle take out this, the signal is invalidated. So, but it didn't take out this, and not enough not to take it out, not to not take it, but it is important that this candle open, close, and go bearish below the low of this one. This is what we call candle anatomy. See, if you trade and these 3 candle close is what we refer to in advanced trading a swing point. Everywhere you see this, even on a higher time frame, everywhere you see this swing point, the market telling you, I am reversing. How long? It now depends on the time frame. If it's a long time frame, if it's a higher time frame, may go longer. If it's a lower time frame, may not. But it's telling you, for this point, I am reversing from here. So it's a reversal point. And that's why our scanner pick reversal point as a buy or sell signal. So when should I now enter? At the close of the third candle. Where is my first candle? This one. Where's my second candle? This one. That's still holding the signal. Where's my third candle? The candle that closed after the center candle. That means you have 3 candles. The number 1, the number 2 that is holding the signal, the number 3 that now open and close after the signal. So this is our 3 candle. You see this? Then where should I enter from? The moment this one closes. So that means when I'm now entering, I'm going to take what we call measurement, which is this ruler. Now, in this ruler, where should my stop loss be? Above this center candle that carry the signal. Why? Because the market enter point of invalidation if he eventually print a new candle and now come and take out this and take out this. Now, in market structure, it is I'm not teaching you, to be doing it manually. You now have a scanner that do it for you, but why would this scanner do this? What the scanner have done for you is the struggle to identify the structure, where will it move to? The scanner summarize the job, but you need to understand the science behind the scanner to say, oh, what this guy gave to me was that this is a structure, this is a high, this is a higher high, this is a lower high. So that means this is a high, this is a lower high. In the presence of new lower high gives strength to the previous higher high. A new higher low gives strength to the previous high. So what you are now saying is that if the new candle open, chances are there that new candle can open from here and even take out this one. But it becomes abnormal if you come to take out this. That means the market is no longer valid. So take me out. So that's why you see the market can do and sweep. This has become a liquidity. It will sweep it. But here it was already protected. Afterward, it will now go down. A new candle now open and go down. So my entry point is here. My entry point is what? Is here. My stop loss is above this guy here. Now, what should be my take profit? We have rule of our take profit. Your first target of your take profit is called 1:2 risk reward. Whatever number of pips you are actually risking into the trade, target times 2 of that and then immediately the market take you and give you your profit. Congratulations. You check for another market again. Check for another. If you can discipline yourself with this, you see that you are very, very in the market. That's one level of entry and exit. Secondly, we that do DCA, I do DCA a lot. So if I enter my market and open 3 positions, and so first one, I'll take TP1 here. TP2, where should I take it? That's where you see me, I extend to where the next support is or next resistance. So you can see the first question the person asks is very fundamental that attend to other questions. Now let me open the chart quickly and show you this I just explained to you now. Let's erase all of this. If you want to screenshot this, screenshot it. If you want to screenshot this, screenshot it quickly. If you want to screenshot this, so that you use it as a reminder. Screenshot this, your screen, so that you can have understanding. Okay, so I want to believe that you have done that. So now let's go back to the job. Now, so look at it, the experiment you've just done. Right, I've asked you to screenshot it. Now, let's open the scanner. Good. See this signal now. Even though it's 4-hour time frame, I'm not asking you to trade in 4-hour time frame. We are going to get to that point. So now look at this candle. What happened here? So what candle is this? Is it bullish or bearish? It's bullish, right? Okay. So should this candle be our first candle? Yes or no? Should that candle be our first candle, everybody? Yes or no? Should this candle be our first candle? Yes or no? If it's yes, type yes. Everybody, in the next 20 seconds. Yes or no? Should it be our first candle? Yes or no? Should it be our first candle? Yes or no? Should it be our first candle? Yes or no? Okay, thank you. It's actually yes. Lovely. Now, the center candle, should it be our second candle? Yes or no? Should it be our second candle? Yes or no? Yes, yes, yes. I love that. We are learning. So now, somebody should tell me, should I take this signal or not? Should I take this signal or not? Should I sell that signal or not? No, yes. If it's yes, tell us why. If it's no, tell us why. Just quickly. I want you to be participating. I hope if you know you are enjoying this class, just give us a fire emoji before you answer your question. You are enjoying this class, give us a fire emoji. You are enjoying this class, give us a fire emoji. Quickly, you are enjoying this class, give us a fire emoji. Should I? Okay, fire emoji, fire emoji. If no, I will close this class. If there's no fire emoji, I will close this class. Fire emoji, fire emoji, fire emoji, fire emoji. Yes, 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 yes. Fire emoji. Yes, 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 yes. Yes, yes, yes. Okay. Yes, yes. Only 2 people give us fire emoji. Okay. 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 Thank you very much. So enough. Now, somebody, should I take this signal? Yes or no? Somebody say, I am lost. Okay, find yourself. Where do you lost go? You were distracted because we were taking you one step at a time. Igor, you were distracted. Oh yeah, so tell us where you are lost. Type it. I'm lost at Obalende bus stop. So where are you lost? Yes, 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 yes. Where are you lost? Let's attend to our sister that says lost. Where, so that we can find you. Where are you lost? Where are you lost? Igor, where are you lost? Tell us, tell us, tell us. At the point of sale. Okay, okay, at the point of sale. Okay. Igor say it's lost at the point of sale. It's lost at the point of sale. Okay. Igor, we have just told you that the scanner, your scanner number 1, you have 3 candle close, not necessarily the color of the candle. All right. You have 3 candle close. Please, nobody should play with my screen, please. Now you have a 3 candle close, and is this an example of 3 candle close? 1, you have a first candle, and at one point or the other, as long as this candle open and close above the previous one, is going to print this signal. All right. When you print this signal, you don't sell. You wait. All right. You wait for the next candle to print. The next candle now print went off very long and collect the button from it. This is a relay. You collect the button from it and then very long and close. That means this candle is your first candle. This candle is your second candle. So if it's your second candle, should I enter after the second candle close? No. You are waiting for confirmation. Now, the third candle opens where the second candle closed, because the second candle open here went up massively. This is how your emotion work. Most of you, when the candle just open, you join what we call falling knife. Now, when this market opened, do you know what happened? At a point, this candle was bullish, right? When this candle opened, do you know where it first went to? Up. You jump in, hey, market, don't break out. All of a sudden, after you jump in, the market just come down. You say, you begin to pray, Holy Ghost fire, Holy Ghost fire, Holy Ghost fire. No, now. Then the candle now close here. Hey, you say, Bese, what is going on? Then, should I enter? No, you are waiting for the third candle. The third candle opened and first went up. No energy. Because this aggressive move, there are counter fire attack. That fire, get out, go back to where you are coming from. Now, that could be intimidation. Then the third candle open. The third candle can open and move massively and break it and say, stop, why are you intimidating my brother? But it will say, Oga, the giant there they are too high, oh, we can't conquer them. Though the place is full of milk and honey, but the giants are too much. Say, okay, no problem as far as your eye can see. Then the market now went down. So this candle actually closed below this. Ordinarily, on the normal circumstances, this is a confirmed sell signal. But somebody who is already advanced learner in the class say something that is very important, which is part of the clauses I gave in the market. I said, if where you are going to put your stop loss is too long, forget that signal, don't take it. And that was the reason the person gave. The person said, I won't take it, even though it's a sell signal, because the wick is too long. By the time you enter here, your stop loss will be too wide. It will take you time to recover. And if you hit your stop loss, it becomes unrealistic, even though the market sell later, but that will intimidate you. So if your stop loss become too bogus, that it's going to be affecting your trade. But on the normal circumstances, once you have 3 candle close, then you are selling. So Igor, I hope you can find yourself now. This candle close, this candle close. I should be selling this, but this candle is too long. My stop loss will be too big. Because the rule says, if you take this trade, you should put your stop loss after the signal. So that means if you are going to enter this market and say short here now, and then at the close of this candle is where you are entering, and you put your stop loss above here, that would be too big. So you probably want to wait for maybe another one, but there are rules, there are ways around it for the first time. But just to give you a clearer picture of the question that was asked, you can see the question 1 is the summary of the every other question that probably we may still attend to. The other question will not take long this, but if you cannot identify confirmatory entry, it will be a big problem. You'll be jumping into market wrongly. Okay, I love that. Igor have found herself. He had left for Bali days, now in he has now come to Lekki, not Tollgate, but phase 2. All right, so that's the first question. I hope we got this. Quite everybody understood this, that you don't just jump into the market because signal come out. You come into the market mechanically when there is a confirmation. Is that clear? Do we get this one very straight? Detailed, very clear. Lovely, lovely. I love that. Thank you very much. Now, the second question, precious, quickly type it. I'm sure after now, we are going to have some shift. And this is how we're going to be doing it every Saturday. So get clarification so that you will be able to maximize your scanner. Yes. Yes. Precious, give us the next questions quickly. And I'm sure that one will not take us too much. Yes, Precious, are you there? What's the second question? Quickly. What's the second question? Precious, you are slacking our hand behind. Type. You cannot type? Okay, you want to call it out. Okay, if you want to call it out, okay, so let me just unmute you. Noah, you are playing with our screen. Where is you, Precious? We're supposed to be able to. So tell us, what's the second question quickly, Precious? You're muted now. Unmute yourself and tell us what's the second question. Precious, unmute yourself. Yes.
Hear me now?
Yeah, I can hear you.
Yes, I've muted myself.
So what's the second question?
The second question was
your network is breaking. We can't hear you. We can't hear you. Okay, whoever remember the second question, please tell us quickly.
That are they in terms of the supply of
It's not clear. Your network is not clear, please. Your line is breaking. Your line is breaking. Your line is breaking. I think who had that question? Elder Joel. Okay, so let me just go back to Elder Joel because your line is breaking. Your line is breaking. Elder Joel, you can unmute yourself and tell us what did you ask us your question?
Yes, my question is on this supporter resistance.
Okay. Okay, thank you. You're talking about the thickness.
Yes, so it's as if they have meaning.
Yes, they do. They do. You are sensitive.
Okay.
They do. Now, so quickly, that one is a straightforward questions. Why are these some thicker and why are these some very tiny? Okay. Now, so why are they thicker? Why are they tiny? Thank you. So now, why are they thicker? Why are they tiny? Is that the thicker that zone is, the stronger the support or resistance of that point. Okay? That means when you see a place that is thick, like you see this one now, very thick. See this one, very thick. That is where a market has series of touch points. Can you see that? Look at this market now. We have market that touch here, bounce, touch here, bounce, touch here, bounce. So when you have several touch points, in that point, it's a strong zone. So the more thicker, the stronger that zone. So you can never say that because this place was thicker. Look at when the market broke this point, right? And then it returned to it immediately after breaking and continued. It went up massively. Look at it. And still came back there again. You can now tentatively say when the market returned back here, it's going to have a support. Look at it. It returned back there again, got another very strong support. So the thicker that zone, the stronger the support. Now, you can even say that this resistance now may not be too strong when the market get there. So as this market, if it get up to this point, it will be fast to break it. But if it's thicker, it can get rejected there. And that was what happened to gold that many do not understand the other day. Gold supposed to be massively continue to go up, but look at the resistance there was thicker. Let's look at it. It's coming up. Can you see that now? So gold was supposed to be going up, but it shows that this point, the resistance there is too thick. I sent this thing to somebody who I think it was Dele, and then when he said somebody who was scalping, I told him, I say, I've entered long on gold, and then I'm taking my profit at, I told him I'm taking my profit at 4,800. He didn't understand because ordinarily the way gold was going by the structure, it was supposed, okay, I'm going to teach that structure separately. It was supposed to go because when we sold, was it last week or the other day? Yes, when we sold from here, I told, it was Aliyu, I was telling, or somebody, yes, when we were talking, I told him, I say, I'm going to be buying back at this point. Many do not understand. Why will you be buying back at this point? And why was I buying up? And why did I sell here? Now, I say I was going to be buying back at this point. Why I was saying I was going to be buying back at this point was the fact that the market maintained a structure. This is a high here. This one become higher than it. So you expect a pullback after a break of structure. And then you expect the continuity of the market when the market retreats. So I said I was going to be buying back at this zone because that is what 50% equilibrium point, which means that is the point I should be looking for a buy. Then when my market react to that point, and that is, as if it's coming thicker, if that place is thicker, you can never say that the market is going to be rejecting at that point. Do you get that now? That's why you see that gold got here. It was supposed to be breaking in and break this structure, but it's now struggling. And so if at the end of the day, this will now become a liquidity and it will return back here. If gold return back here, you are likely going to find another buy because this place gets stronger. I'm using the complementary of your scanner. So the thicker the point, the stronger this the the rejection or the bounce from that point. Does that make sense? It does, right? Okay, if you get it right, so type yes on the comment section. You get this clear, very clear. Type yes on the comment section. Okay, so we're going to go to the next question. I think we have 2 more questions, and I will rationalize everything for you in a clear term of your market. So now, somebody was asking, are the signal sent digitally or at, okay. Somebody say, will the signal give us like a figure? No, it doesn't give you figure. If you want signal for figure, that is from some of the signal for figure come out. I have some, like somebody was chatting with me. I don't know, maybe it's around now for the training, and he sent me an example of a signal that give a figure. And I told him I have all of those scanner, but I don't want confusion in my trade most of the time. Those type of signal are more like lower time frame, buy small, sell this, all of that. There are very, very many of them. I was telling the person, I call it scalping and all of that. Example of it is like this. I don't too much patronize or give it out like that. So look at such example is this. Now, such example give delay signal. Look at it. Look at what that person is asking about. You can see that. So look at where it give you an entry. And then when you get to that, when you take that profit, you will tick it. And then look at the entry, look at the stop loss. I enter sniper entry in my trading. I don't tolerate a long stop loss for my trading most of the time. So you can see this now that gave it. But if you go to lower time frame, perhaps, all right, in 5 minutes, for people who are scalping 1 minute, 5 minutes, and all of that, they could enjoy it so much, right? They could enjoy it so much. Look at it. So even when this market is rejecting, he will still tell you to go buy, but he will pull back massively that you'll be afraid. But the stop loss is bogus. Then, but if you go to like 5 minutes, you will be doing some kind of funny scalping, buy, sell. But by the time market is ranging, can you see now? This is Bitcoin. So you can see that type of scanner the person is asking of. Buy here, put stop loss here, TP1, TP2, TP3, have some of those type of scanner like that. But right? So it doesn't give. So your own trading, your own scanner confirmation is when you get this buy, this major buy. And this major buy is not restricted to a particular time frame. It goes to all time frame, lower time frame, higher time frame. You can see that this is 4 hours. And yet you see buy, sell, and then just your confirmation. So it does not give figure, it gives you entry after your confirmation. And then when you enter the trade, you are putting your stop loss. Example of this type of trade now, for instance, if I take a trade, right, and at the point of interest, maybe like the support or resistance, my stop loss, if the signal candle is by the support, instead of me just taking my stop loss below the candle, I put my stop loss entirely below the demand or supply zone. Okay, so it give you entry by this, you enter by the candle confirmation, and then put your stop loss and your take profit. This is the lack of discipline that many people have when they are trading. Okay, so the last question. All right, somebody say, I was counting 4th candle as 3rd candle. You are wrong. No wonder your trade will always take you out. At that 4th candle, you are supposed to be being profits. So you are supposed to be counting your profit. Then you are now still struggling. Okay. Market fractals. Explain market fractals on higher time frame. Okay, so now the last question is where I'm now going to wrap up with how you're supposed to take your trade. Now, Ali, you asked a question. This is the failure most of us have in trading. If you do not understand this, you are making a lot of mistakes. Somebody say, like how many pips to be set for stop loss? No, it's not you that determine it. It's your signal that determine your pips. And it is your stop loss pip that determine where your take profit is going to be, because that's the rule of your trade. Now, let's quickly go. So to answer Aliyu question, let me give you one summary. And I've done this, many of you have not read it anyway. Now, this is the point. Most of you have this issue because we don't pay attention to study, and then study to show yourself approved. They are very important. Now, I always say that trading education is not for certification, it's for profit making. Now, quickly, everybody write this thing down. I've taught you about what we call time sequence. I've taught to people about what we call time sequence, and I've done training about time sequence. So time sequence is the problem most of you are having when you are trading. If you don't understand time sequence, you are going to struggle in your trade. Okay, now time sequence and structure. Let's quickly do that so that you understand why you are failing some trading. Time sequence and structure. So now in time sequence, and structure, we have what we call internal and external structure with the time sequence. 1 day, daily time frame, is the external structure of 1 hour time frame. Okay, please, you can mute yourself so that you don't stop our recording. All right. So time sequence. So time sequence is this. 1 daily time frame, 1 day is an external structure. 1 hour is the internal structure of 1 day. Now I'm going somewhere now. So when the market is bullish on 1 day, so the market is bullish on 1 day, so it's going to create something like this. It's going to create something like this. Now, let's say this is daily time frame in structure. So now the challenge is this. In 1 hour, that structure you are seeing that is an uptrend in 1 hour. A pullback of daily time frame is a downtrend on 1 hour. Get it straight. Get it straight. You see now, when you go to 1 hour time frame, this is what you are now going to be having here. So a pullback of daily, even though daily market is bullish, 1 hour will be bearish because the 1 hour time frame is an internal structure for daily. For that, this one you are shouting, hey, who? Is just a pullback, is the timing you are using. Look at it. So that's why I make a proposition. And I said this, higher time frame is the boss. While lower time frame is the employee. So whatever boss tell employee to do is what he to do. So when you're on a lower time frame, you are only doing the job of higher time frame and he can deal with you. So just get it now. A pullback of daily is a downtrend, is a bearish market on 1 hour. So the bigger picture is bullish, but for a meantime, it's bearish. So now, if I'm a daily time trader, that is a swing trader, right? And so you see a swing trader or position trader, swing trader trade, their lower entry point is 1 hour. Why? They are looking at their chart on daily. They look at daily structure. And then to enter, they come to 1 hour. When will I enter to buy my market on 1 hour? Look at it. I will enter my market ordinarily. This is my market entry. Look at it now. This is 1 hour. You see this 1 hour that I was making noise, just making noise. It's a pullback of daily. So what should I do? Very simple. How do we enter market ordinarily? All of these points, they are swing point of daily. These are daily swing point. These are daily swing point. That means a high, a low, a low. So this low was lower than this. If this low was lower than this is higher low. This one now become higher. Now look at it. When you are now trading, this is the error most of you make when you are trading. This is a low. Market was jump by structure. It will be doing different candle open. It get to this point and it was tired. When it was tired here, this become a swing point. but an external high. And the market was drifting down. Now, as long as this place is still standing, the market has not decided anything. As far as when I come to the market, this is a high, this is a low on a daily time frame. The market is coming like this. You jump into it and say because the market is bearish, you are on 1 hour. You are fooling yourself. You have to go and check the narrative on daily time frame that this is just a mere movement. So this market, as it's moving down here, it now got to a point and now create another structure. See what structure it now created here. In getting to this point, right? This is like the last low. The market now do like this. So in doing this, when should I enter daily buy? When the 1 hour time frame become bullish. So as long as daily time frame is still bearish, I'm not going to buy because 1 hour is an internal structure. When 1 hour change direction from being bearish to bullish, I don't even need anybody to tell me. How will I know? Okay, because 1 hour now has a low here. Look at the low of 1 hour. Look at this high. Then look at this low. So that means 1 hour, say I have a low here and I have a high here. This is a low. So this one is a low. This one is a high. When this market leave this low and break this, it creates a new structure. That means that's what we now refer to what we call market structure shift. The 1 hour have shifted from this going down it was doing and changed to up, meaning we have a low here. This is the last low on 1 hour. This is the last low on 1 hour, and this is a new high on 1 hour, and this is the current low. But it didn't take out this. Then the moment the market move up and break this, you see inside this play, you call it market structure shift. It has shifted direction. Now, should I enter? No. You wait for the market to now pull back. In this pulling back, this low here, it can come to sweep this low, but this low is now protected. But most importantly, this pullback, you should be looking for the equilibrium. 50% of from here to here should be my entry. When I now enter on that 1 hour, do you know what I will do? I will return back to my daily time frame. Now, in returning back to my daily time frame, as at this time you are checking this, on daily time frame is inside the bottom. So you are able to see that your entry on that daily, on 1 hour, may be somewhere here. So where should be my first target? The high that brought this thing low. At that point, my stop loss will be below here. My take profit will be here. What you are projecting is that because this is a high that was created before, now it is a potential support, it is a potential supply, it is a potential resistance. Sorry, not a potential support. It is a potential resistance. It is a potential supply. So you are saying this market now will go up, probably either to break this or to reject. If reject, that's where you now say you have double top. So you have put it here, you have taken profit here. When you take profit here, then at the end of the day, what happened? The market now broke it. When it broke it, should I just continue to buy? I will only buy if it break and return and bounce from here, but I'm waiting for it to pull back here. So the challenge you have when you are seeing 1 hour, you are seeing 4 hours, you are seeing daily, the market is on 1 hour is bullish, and then on 5 minutes is bearish, because you do not understand what we call time sequence. No, so quickly you can see now. So now, 4 hour time frame, 4H, if the market is bullish on 4H, okay? If the market is bullish on 4 hours, what is the internal structure? Majorly, the internal structure of 4 hours is usually M15. This is what we call time sequence. If you like, you can get it sometime on M30 and M15. Now, what of 1 hour? The internal structure of 1 hour is M5. Many of you don't follow my training when I said, you don't understand the logic when I say, when I get a signal of 4 hours, I go to 15 minutes to take it because I want to see what the internal structure is saying. Then M5. Then what is the internal structure of M15? M15. Then the internal structure of M15 most time could be 3 minutes. You see, when I enter my gold, I go to 3 minutes, I take profit down M3. What is the internal structure of M5? M5. The internal structure of M5 is M1. Simple. When the market is bearish in 1 minute, it is a pullback on 5 minutes. When the market becomes bullish in 1 minute, it's now an impulsive move of 5 minutes. This is where you get it wrong. So now there are series of structure. I hope you copy it. So let me just leave it so that you can just screenshot everybody quickly. Have you seen where we are creating problem for ourselves most time when you are trading? Now, because you are swinging and swimming in a very bad environment where boss is telling. Now, look at it. This is your scan. This is structure. So now let's summarize our training. This is the summary of our training. Now, listen. See this time frame now. This is 4-hour time frame. Now, ordinarily, from here now, it becomes a structure. That's why I said enable your structure on your scanner. If you go there, you see the enable of your scanner. Now, this is 4-hour time frame. If you look at this 4-hour time frame, the lowest point is here. So that means if I'm looking at this structure, this is a low, this is a high, this is a low, this is a high. Because higher than this, body must break above the high of this. So this is a high. This is a low. This is a high. So, but this high now, I've not clarified a lot of things. All of these things that I'm still doing here, they are still the same thing. So until you have a lot of movement from here, before you can now say I've established this high. That's the same thing. Look at it on gold that many of you don't pay attention on. When I'll tell you that this is how we take trade with your scanner to make it simple, effortlessly. Don't give yourself stress, any headache. Look at it here. This is your gold. When I trade, when I told people that market was going to bounce from here when gold was crashing, people do not understand because I have a fair value gap on daily time frame. But how many people pay attention to all of this detail? Do I need to know it so much? No. I have told you your scanner is more than your instructor. That means your scanner is more powerful than me because your scanner will be with you. You can study it. Now, look at what happened here. By structure, look at what the market did here. This is a low. This is a high. This is a low. You can see the L. You can see the H. This is a high. Look at another. This is a low, right? This is a high. For now, market is confused on gold. Why? Now, definitely it created this low now. What to expect was that if market did not break this, you are wasting your time, whatever thing you are doing. So that means, let's pick it this way. So the market's supposed to break this. But in this case, it didn't break this. Look at the danger now. The danger is this. The market, if it further come down here and break this low, and now create another point, that means this one become a lower high. That means I've used this one as unbroken high. You now want to change structure and continue to crash down. Now, let's see where you say you take trade. So don't give yourself stress. How do you take trade? How do I enter trade? Look at your Euro USD, especially those of you who don't have much fun and you don't have much time to stay in the market. You don't have reasonable fun. I've been warning many of us. You either let your gold be on micro account on your well trade, or you trade currencies. How do we trade this scanner? This is the summary, which I have done before. How do we trade it before you now have any other question? Look at it. When Felix come to the market, what is the first point of contact? When I come to the market, my first point of contact is that I go to my daily time frame. Simple. Irrespective of the market, I go to my daily time frame. Take note, please, quickly. When I go to the daily time frame, what exactly am I looking for on daily time frame? When I come to the daily time frame, what exactly am I looking for? Now, take note, please. I'm looking at the candle that closes yesterday. What is the nature of that candle? Is that candle having a momentum as a bullish candle, or it has a weak momentum? If the momentum is so weak, I'm not going to, you'll be careful for that day. Market will be confused. Example, look at Euro USD. Many of you didn't know why Euro USD continue to bullish. Look at this is daily time frame. Now, when you come, the market, look at it. This is the market. Look at this candle. This day, this candle is a confused day. So quickly note, those of you who are my ecosystem that have taught you about our PBS, P and L trading strategy. What do we do when we call normally? I'm not asking you to do if you are using this scanner. I'm only explaining this scanner. You see us, we will mark the high and the low of the previous day candle. That's what we do. Now, when we do this day, this candle now was bearish and has some momentum to an extent. But the little challenge is that it's a bearish candle, but the wick of the bear is too long. That means the market, there is another counteracting. There's a counteracting to this candle. But I'm not asking you to know those two more detail. What I want you to learn is that when you open your chart for your scanner to trade, irrespective of the time you come to the market, you want to see the candle that closed before that day. Was it a momentum candle? This was supposed to be a very strong momentum. Look at like this is a momentum candle. Now, this was a momentum bearish, but it was not too clear, though it closed below this. But there was a counteracting. That means the market for that day may not be too powerful. Now, but it's bearish. That was how the close of the following day was bearish. If you enter this type of trade, you can't hold. Aliyu, I'm talking to Aliyu in particular now. You want to hold trade for this day. No, you can't hold because there's no clear movement. So, but it's bearish. You are going to find buy and sell. No problem. You take your profit. Now, the following day, what will motivate me is this. They will have different candle pattern. This is an inside bar. It neither closed below the low of the previous day, neither did it take the high. So it's an inside bar. No problem. That means the following day too will be confused. That's why the following day was confused, though was bullish, because this was an inside bar. Now, I'm just telling you. Now, the following day, the next day was bullish. That was a powerful one. Since this one is a clear distinction that this market is going up. Let me tell you why. The previous day candle was bullish. The next day candle, look at what I just taught us about the anatomy of candle now. Now, somebody can tell me, who can tell me this candle, okay, maybe you are not seeing where I'm pointing. Let me take this guide to show you. So, ladies and gentlemen, this candle that have this red that my cursor pointed at. Now, the following candle after it is this one up here, okay? Now, this candle up here, where did it open? Did it open here or up? So the here I say is 1. The up I say is 2. So here or 2. Where did it open? Where did it open from? 2. Thank you very much. I love you guys. Lovely. I love you guys. You're learning. Now, do you see what the candle do for that day? Now, many people, when they come in, immediately they come in. This is how you lose trade. The market first open at the close because this candle closed bullish. Now, it now first open, contraction, it now expand down. That is deceiving you that I'm going down. Many people will enter trade for that day, especially if you're on 5 minutes, 15 minutes. It's going to be bearish. You're now jumping. All of a sudden, I can now turn. What is going on? Is because the market was going bullish. So that means this is a powerful one. The following day when I come, see, when I come this day, look at this market. This is the close of the previous day. Look at it up here. So if this is the high of the previous day, I mean. Now, because this is the high of the previous day, this market that opened up this day closed above the high. That means the next day is going to be bullish. Potentially higher probability. Now, you don't even need to know too much about this, but your scanner is going to work just to have an idea that today we are bullish. Like that was the question Super K asked me the other time. We do that. Today we are bullish. That's what we do every Sunday on market update. Now, since we are bullish, I will go to my chart, my scanner, When he give me buy, I will be doing more of buy for that day. And if I have taken one or two trades, if I one trade should be okay for you for a day, if you are meticulous, except if you are scalping. So I will do more of buy for that day, and you will enjoy yourself. Now, what happened? The next day was bullish, but you will not to enjoy this one because this candle didn't close above this. It only do as if it closed a liquidity. But look at now what happened. The candle closed, but it's on top of a very strong support, like what Mr. Edajoe asked. See, very thick. That means this market is still what? Bullish. Now, the following day, this day. So you cannot tentatively say, okay, the potential resistance of Euro USD when you open market on Monday, the market still potentially, probability for the market to continue going up on Monday is high. So that means Euro USD on Monday are supposed to be looking for buy. But at first, when the candle opens, see what the candle will do. The candle will still do the abracadabra I just showed you guys. The candle will do like this. So because where is the candle going to open from on Monday on Euro USD? Quickly tell me, everybody. Let's be sure you are still following. Now, based on this candle now, where is the candle going to open from on Monday? So let me just type. So 1, right? 1, and then 2. So somebody should tell me, where is the candle going to open from on Monday? 1 or 2? Oh, I love these people. Yes, 1. Igor. Igor, you miss it. Not 2. That means there's something, maybe when you watch this video, you are going to get clarified. It's not 2. It's not 1. It's 2. Where is it going to open from? 2. If you say 1, you are wrong. 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 It's going to open at 2. Now, all of you that say 2, can you tell me why? Why will it open at 2? Very quickly. Let's go. I have wonderful student here. Why will you open at 2? Tell us. Anything you understand, tell us. Why will you open at 2? Type it. Why would the market open at number 2 on Monday? No, Sunday evening, sorry. On Sunday evening, the new week opening. Where will it open from? Why will it open from 2? Yes. Not just say 2, not just say 1. Why will it open from 2? Okay, because the previous candle closed at 2. Lovely. Sorry, because it closed at 2. Okay, because previous candle closed bullish. Okay. Thank you very much. So because this is like candle, what we call it in trading, okay, the current candle closed up 2. Thank you very much. I love you guys. Now, because why? This is a bullish candle. If it's a bullish candle, invariably, that means the previous candle closed here. This new one open here, first went down and now move up. This moving down is enough to deceive a lot of people to be saying market is bearish. All right? I'm not teaching you advanced course. I'm teaching you basic understanding of the market. That's why I can open, either I use scanner or not, I can open the chart and trade. I'm telling you, I can open the chart and just trade. You won't see any dots on my chart, and I will trade and I'll make money. So, but what does this scanner do for you? You just simplify your entry model. Very simple. So now, if that is the case, the market is bullish. Okay. Am I trading on daily time frame? The answer is no. So we now said, if you have checked your daily, the momentum is gone. Why do you check the daily candle? If the candle is not too clear, like look at this, all of these days. Can I tell you something? Most people who trade in these days, they will lose money. Number one, if they enter long, they will hold it. Market will not define where it was going. Look at it. No definition. Market even move up very well. You think it's bullish. All of a sudden, it came down. So this type of days, you are supposed to be scalping. Small move. One entry, it give you your profit. Have a nice day. Look at this now. Look at this candle. Even though we went bearish, see, short candle. These are bad momentum. Bad momentum. You are going to be deceived out of the market. Be careful. So most people say, we give 10 signals a day. What if the market did not give signal? Where are you seeing your own signal from? Have you seen it now? Trading is boring. If it's not boring, you have not started trading. So now let's quickly go. So how do I now take signal? Number one, I'll go to daily and I understand, okay, momentum is good. Just to see that the candle that closed yesterday was a very powerful signal, candle. So now what do I do next? And I go to my 4 hours. No. You don't need to. It's not your business. You already have an idea that the market will open. We open at this point. So you wait. It's your waiting. You already have an idea that market was going to open from here. And then when you know that the market has opened from here, after a few hours of market opening, maybe 1 to 3 hours, you see that the market have come down. And then you know that that's a deception. When the market first opened, the next 1 hour, 2 hours had deceived you down. And then if it open and first go up, that means you know that he has swept the high. That's why we do this. That's why we do marking of high and low of the previous day. Then when the market take out the low, we know that it first went down. Then we are buying. When it take out the high, we know it has to go down. Then we are selling. Very simple. There's no much English about that. Look at it. When your candle open, this is the previous day. Your previous day candle. Now, and this candle was bullish. So the new day open. So your previous day candle is a very simple thing. You don't need any herbalist to tell you anything. Okay? Now, this was previous day candle. The new day open and first do like this because you know that it's going to open here because it was bullish. What the first do? He went up like this. And then, so when he went up like this and create a high, higher than this. So what has happened here is what we call sweep of liquidity. If you are a swing trader, a swing trader who are patient, this is Monday, this is Tuesday. You are not going to trade either Monday or Tuesday. You are going to trade on Wednesday. You know why? Here is the range. Here is the sweep. Then here is the distribution. So this is accumulation, manipulation. On Wednesday, when you open, it first went up a little, then it's selling down. You are now targeting this low. So this is how patient trader trade. So when you are trading for the particular day, somebody say, I'm not trading because I've not seen a trading opportunity. But market is bullish. You don't know anything. So now, when you come on the daily just to see momentum of the market, then you now step down to 4 hours. Please take note, everybody. Now, why do I go to 4 hours? Please take note. It's very important. What I'm explaining now is very vital. Now, when you go to 4 hours for that day, market is not active now. When you go to 4 hours for that day, now your scanner, when your scanner give you sell or buy on 4 hours, take note. Niente. Now, please pay attention. When your scanner give you buy or sell on 4 hours, they are powerful sell or buy. But do you take the signal on 4 hours? The answer is no. Oh, so now, like this day, let's use this day because this one is just, new day has not opened, so don't get yourself deceived here. Now, when this signal open this way, look at this buy. Number one, this signal open this buy signal on top of your support. That's a powerful one. Number two, this is 4 hours. Immediately when you come and then the signal is showing you buy on 4 hours. And I told us very simple thing. I said go down to 15 minutes. I've told you about time sequence now. The signal say buy on 4 hours. Just go down to 15 minutes. Some people take it straight. I don't take it straight because I love to reduce my stop loss. The more you reduce your stop loss, the more better money potential you will make. And even when the market stopped you out on your stop loss, you won't have too much effect. Okay. Now, when I go down to 15 minutes, what am I looking for? I'm looking for the repetition of the signal. And what do we say is the confirmation of your entry? This is the confirmation of your entry. Look at it, ladies and gentlemen. This candle here, because it has given you to buy on 4 hours. Now, this candle here is your contraction. That's your candle one. This second candle, you see now, this candle went down first because this is the close of this candle. This candle, because it was bearish, so that means this is the close of this candle. Are you seeing it now? Now, since this candle closes here, then the new candle opens there and first went down. That is deception. And now close inside. In fact, we'll call it candle ring theory, but I'm not complicating issue for you. You are working with your scanner. Now, when the candle closes here, can I enter? The answer is no. So now, candle 1, let's mark it. So I'm sure, Ali, you get clarified today of what you are labeling to be your candle 3. You are working with candle 4. This is candle 1. And then this is your candle 2. This is your candle 2. And then this is your what? Candle 3. This is your candle 3. So your entry is here. After this close of this candle 3, that's where I'm buying. And I take my ruler. I don't trade without measuring what I'm about to lose. So where should be my stop loss? My stop loss below the candle 2, because that's the one that provides the signal. Below it. Now, somebody was asking, how many lot size should we now, how many pips should we use as stop loss? No, it's not you that determine it. Now, if you look at this now, this is 23 point something pips. Look at it. 23.3 pips. So let me summarize to be 25 pips. My law and my rule of trading is 1:2 risk reward first. So I will now do like this, 1:2 risk reward. That means my first take profit is going to be 40 something pips, give and take, up there. So 1:2 risk reward, all right? Then what should I do when I take this trade? The question you ask yourself is that how much are you trading with? Many of you don't pay attention to this. This is a very critical area. Most of you enter trade without even be aware of how much you're about to lose. Listen, every time you enter a trade without having awareness in your mind that this is amount about to lose, you're a gambler. It doesn't matter how long you have been trading. How do you come to a market you didn't negotiate? Any market you buy without negotiation is going to lead to a regret. You have to check your negotiation power. What's my negotiation power? Oh, there are some trades I don't take. If my stop loss is too bogus, excuse me, I will look for another one. Assuming this week now, long, very weak, okay, I won't take it. I will wait again. So that is where you trade. Your trade is as important as how many number of pips are in your stop loss. So now I've identified my stop loss. Let's say it's 25 pips. Now you now come to this point, which I always give. You now come to do your what's called position sizing. How much am I trading with? Excuse me. Now you are trading with $50, $100. So if you are trading with $100, I'm not the one to tell you how much you should risk, but I will tell if you trade with small money, you are more exposed to risk than person who trade with big money. But I observe something. Even people trading with big money, if you don't know how to do position sizing, you only have big money for nothing. It's big for nothing. So now you are trading with $100. Okay, how much do I want to expose to the market? This is the rule of put the amount you can afford to lose. When I hear that, it's not investment, it's not in an investment, it's in trading. Because I have $100, but out of this $100, how much can I afford to lose per trade? Oh, I can afford to lose $10. Okay, that means it's 10%. So you now put it like this, 10%. How many pips is my stop loss? 25 pips. So it is that number of lot size in your stop loss that will determine number of pips in your stop loss that will determine the lot size you will use. Not random lot size. Yeah, I'm using 0.01. That you are using 0.01 in your trade, it does not mean you have risk management. Yeah, so many people use it. No, I don't go more than 0.01. It's not a definition of trade. What determines your lot size is the pips of your stop loss and the amount you want to lose to the market. So now, let's go. You now say, calculate. Now, you now that use 0.01 in a market that was not properly monitored or organized, that's not mechanical, you use 0.01, you are worse than the person that used 0.04. Because the distance of your lot of your pips in your stop loss is what determines the lot size. So that means even though I'm using 0.04, it's still $10 I'm going to lose if the market hit my stop loss. That's what you need to get clarified. So if that is the case, $10 is what I'm injecting to the market, and I'm going to use 0.04. Good. This is where I do my DCA. So since it's 0.04, and I want to trail this market, you divide your market into two portions. Hello. Now, dividing into two portions is that I'm going to use 0.02 times 2. So you now come to the market. You enter two positions, 0.02. The first one, you put 1:2 risk reward. Congratulations. And put your stop loss like this. The second one, you put your stop loss, but you don't put take profit. If I must put a profit, remember what brought you down here was the signal from 4 hours. If you now want to go to the second one, you have to return back to your 4 hours that drop you here. Somebody is learning now. Now, when you go back to 4 hours, you can now see the overview of the market you come into. So going to 4 hours now is going to give you the range of where the market is going to in a higher time frame. But you have come down to take the market in a sniper entry on 15 minutes because 4 hours already giving you the signal. Hello, somebody's relating. Now, you can see now, at this point, expand. So that means you see this point that time that was a support, that's now a support. It will be a resistance. So that means your 1:2 risk reward is justified. But the second one, you decide not to put any take profit. You allow it to be. See what happened. This market was aggressive. When it got to this this resistance, what did he do? He broke the nonsense out of it aggressively with this heavy candle. You are happy. This is how you trail the market. Now, at this point, the market continued to move. And cross. Thank you very much. No problem. You are fine. Now, look at how you trade this market eventually up to this point. Now, if you trail up to this point, if you go to 15 minutes, you will have seen structure, up, down. And then, at the end of the day, what happened? The market, the second position, gave you 1:7 risk reward. That means what to engage to the market was $10, and you took half, which means $5 is gone. So 1:7 risk reward is mean $5 times 7. So the other one, you make $10. This one, you are making about $35. This is how you trade. And then the market continued. It came down. You can see now it bounced on this support. Now, we now say sometimes you come to the market, 4 hours may be too far to give you signal. If I cannot find my signal of 4 hours, what do you say you should do? Go to 1 hour, because both 4 hours and 1 hour are structural system. So when I cannot find signal, I cannot find buy or sell on 4 hours, I go to 1 hour. It means when you go to 1 hour here, you will have found a sell signal here. See here. So when I now see a sell signal on 1 hour, do I take the trade? The answer is that no, just go to your 5 minutes so that you can find sniper entry. Now, when you go to your 5 minutes, simple. Don't do job. Don't do any job. Go to your 5 minutes. Your job is that you are looking for your scanner to give you that sell. Repeat what to say. So that's what we call confirmation. That thing you say 1 hour ago, can you tell me now? Let's look at it. The network, so how bad? I'll return back to the 1 hour. Okay, so now let's go to that. I'm telling you about going to 5 minutes. Okay, good. So when you get to 5 minutes, what am I looking for? You are telling the market and your scanner, that thing you were saying, can you repeat it? That thing you told me some minute ago, can you repeat it now in the presence of this man? You say, why not? I can tell you now. Now, this is 15 minutes. I want to go to 5 minutes, remember? Now, you don't stay in 5 minutes. Neither do you stay on 1 minute. Neither do you stay on 3 minutes. You come there to do something, to do cross-examination. Now, why most of you, again, lose so many trades, you stay on lower time frame when they are taking instruction from their boss. You get to a company, you are asking the messengers of the decision of the management. You are fooling yourself, excuse me. Go to the top manager. When I used to do network marketing, when I go to a company and I want to introduce to my platform, I don't talk to the people at the gate. There's a language I use to them, all right? I remember sometime many years back when I was doing much network marketing and I was in a training. I went to, many of you, if you are part of me, if Parkins are not like listening now, I was in Calabar for a training at the Nava base, right? So look at it now. Look at your 5 minutes. Now, this is your 5 minute market entry. Now, your entry is here. Look at your accumulation, look at your sell. This is the candle that confirm. Your stop loss above this. Look at this, 16 pips. Or can make it up to 20 pips if you like, just to give a buffer to your trade. So 20 pips. So the first target, don't forget this. Your first target is 1:2 risk reward. It doesn't matter what that is. And if you are the type that just look for one trade in a day and all of that, and you're not ready to trail anything, but do everything to this one. 1:2 risk reward. How much am I putting in? $10, $20. Okay, if it's $10, 1:2 risk reward, what loss am I going to use? This is 20 pips. Okay, $10 is what I want to risk. Okay, $20 is what I want to risk. You go. How many pips? 20 pips. This is it. 20 pips. Yes, calculate. 0.05. So you come to the market and enter your market 0.05. Your stop loss there, your take profit here, and then you go. Go and sleep. So go and sleep. You are paid the stop loss to work the night work for you. So go and sleep. You just come back. It's either you exit at the stop loss or you exit at the take profit. Once you take this profit, you say, thank you very much. Have a nice day. The market continue to go down. You say, to say, no, don't do that. You are make your $20. Fine. For people who still have time, you can see that on 5 minutes now, do you observe something? Because 1 hour have dictated that this market will be selling. Look at a buy signal. Do you know why he gave this buy signal? This is a swing point. Market turn. But this turn, did it turn very well? Did it go far? No, it did not go far. It moved up, but all of a sudden, a massive sell. Because 1 hour is already dictating to 5 minutes, saying, this is what you should do for me. It's all correct, sir. OBC. Then the market continued to sell. Another buy came up here, and then see the market was struggling sideways and still sell again. So it is when you now go back to your 1 hour, you see what's actually happening on the 5 minutes. These are the error we make. Now look at when it turned back. You wouldn't know when it turned back if you don't return back to that 1 hour that brought you down to that 5 minutes. These are the error we make in this trade. You can see this is the beginning of this episode, and you can see that it was so exclusive. Look at it here. Now, when you go to 1 hour, perhaps if this one give you to buy, you will have gone 1:2, you will have done it. Look at another 1 hour. So you see the 1 hour? So it come here. This is a demand zone. Even if you are trading without this scanner, for instance, you know that this market, if I buy here, you are expecting for retracement and confirm. It came back there, just sweep liquidity. And why your signal give this? Because it has swept liquidity. This is liquidity. This is a low. It sweep it and return back. And again, the other market came back and even still break it. But this is your 1 hour I've given you. When you look at this your 1 hour again, come on. Oh my God. That's why I cry most time when people tell me, hey, I don't even know what I did. I say, hey, this is the most simplified scanner among all. I don't want to give you smart money concept, all those jargon. What we are looking for is money. Is not, nobody give you certificate for learning to understand those things. These are concepts. What matters is that how much are you making? I don't care what to know about the market. If you are not making, I don't care. I don't bother ask you question. What am I doing with you? You are not making money, but you can analyze. You can tell me the name of a different candlestick, Mariposo, Oga. Don't matter. What matter is making money. If you are not making money, it's not making sense. So forget about those names. Do I know the names? Fine. Do you need to cram the name? No. What do you want to do with the name? So just come and take your trade and then let it give you what you are looking for. So look at it now. See, you see this candle, it closes up here. This trade was questionable, was struggling. You can see that they didn't go smartly. It still returned back again. Now, if you look at it, because it has given you to buy, you'll be struggling to buy here. Now, but let's look at something. The market returned back and give a more strong confirmatory entry here. But this signal is telling you I'm still valid because this one didn't take out this. That's why it didn't give you anything here. But at the end of the day, that's still the same signal. Now, if you take it here, it was doing all of this movement. If you understand, that's why I said this signal, this canal will teach you a lot of things. You already seen that our entry model is 3 candle close. Accumulation, manipulation, and distribution. So you still end up adding more position here if you really discipline yourself trading. And what happened? See how the market deliver. Now, this is a long week. I don't take it because it's not even valid. You see, buy. The next candle, what happened? Imagine for this one is bullish. This one, bearish, but you say buy. But look at the next candle that closed. It couldn't do anything. Then it took Even though it didn't take you out, but me, my stop loss will be too bogus here, and this candle didn't close well. I'm not going to do anything. Look at the market, eventually travel. But what did it do? Liquidity sweep. Look at it, 5 minutes. It swept liquidity here. That's why it gives signal. I've told you that our scanner is programmed around three major things. What and what? Who can answer me? Three major things that our scanner program around. Can type it on the chat box quickly. If you remember, type it on the chat box. Now, what happened here? This is a potential resistance, and the market swept the liquidity. Look at the scanner. It gives you a sell, and then look at it. Now, I won't have time to explain this. Most of you have been following the signal. This is what we call change in the state of delivery. Sometimes the candle, one candle will function candle of two. And then look at this. If I'm taking this trade, 1:2 ratio, what you have delivered your trade and enjoy yourself, then look at it, another buy continuously. So this is how you take your trade. Stop giving yourself headache. Come in, look at the daily. Do we have momentum? Yes, we have good momentum. Oh, good. And then let me look at my 4-hour time frame. Oh, my 4-hour time frame say buy or sell. Oh, let me go to 15 minutes. Oh, my 1-hour time frame say buy. Oh, let me go to 5 minutes. Sometimes I scale down to 3 minutes. If it's gold, I go to 3 minutes, 1 minute, and it give me very nice sniper entry because your scanner will still paint again there. Now look at this one now. This is a sell at that day. So why will I not sell? Why will I not have sold this one? Let's look at it. So it came on and it says sell here, and then soon you go to 5 minutes. So go to 5 minutes here. Let's look at it quickly. 5 minutes. Okay, so you will have sold this definitely because this is a sell. This is candle confirmed. So that means you will have sold this one. But why I may not take this trade serious? Can anyone tell me? This is Friday, market is closing. If you look at our platform, I don't give signal on Friday. Very rare. I don't give signal on Friday because not everybody will know to manage it. Why should I not take signal on Friday? You may not be able to close it at the end of the day. And look at even when the signal was coming. This signal was coming at 4 p.m. on Friday. So where are you going to go? No momentum will push your trade again. And what market does, when market close on Friday, at the opening on Sunday, it normally jump. And so it could jump and just jump, boom, and then take you out. And yes, still go your way. So that's why closing of the week, I don't take trade. But if not, under normal circumstances, this has given you this sell. Now you enter here, 1:2 risk reward. Let's see. So your 1:2 risk reward was not delivered. So the market was struggling. Because why? There's no momentum. Very simple. But do you know that on a normal day, on a good day, when there's momentum, this is a powerful sell signal. Can I tell you why? Who will tell me why this is a powerful sell signal? Just 1 minute. Who will tell me, type it on the chat box, why is this signal a very powerful one? Who will tell me quickly? Who tell me on the chat box, that signal was powerful because of ABC. Tell me. Okay, somebody say engulfing candle. Yes, you get it. That's good. I love that. All right. Somebody say bearish engulfing candle. Okay, I love that. That's part of it. Somebody say tick zone. Okay. Someone say price action, liquidity, and smart money. Okay, thank you. All right, now let me show. Now, yeah, so not necessarily that how tick that place is, but most signal when you are selling or buying, and there is a resistance ahead above your selling, it complements your sell signal to say, okay, yes, it's actually done. And then the person who sell liquidity, if you go on that 1 hour, the market swept liquidity and then give an engulfing, which is good too. And then these are part of things. So most time when you are taking a sell or a buy signal, and then you have your supply zone above and you are selling, it's a very powerful one. And then if you are buying, and then you have that your support zone below it, is a very powerful buy. Okay, thank you very much. This is very, very good. And then all of that. Somebody was saying, this is where I mostly get confused. Please, sir, can come again on this DCA aspect. No. You don't get confused on DCA. Now, it's not me that decide your DCA, okay? It's not me that decide your DCA. What is DCA to start with? Please, everybody, DCA is not a complex language. Listen, everybody. Now, I've told you it's forbidding you trading without knowing how much you want to put in the market. That's an error. Now, listen, if you don't bargain how much you want to put in the market, you can afford to lose in the market. You will lose what you don't bargain. Hello? And you can't question it because you say, I'm not aware. Every trade you want to enter to, you say, how much is my capital? Now, some of us who trade prop firm, I've always used this. Let's say you're okay, like some of you now, you have 100,000 prop firm that you are practicing that was given to you because of traded mastery, merge, and then do us blibli and go to gold funded, for instance. Now, everybody is giving 100,000. This, even those people who have bought account, that's what I discover. Either you have bought, either your account is $1,000 or 10,000. They just give random. Everybody 100,000. So now let's say you are trading the 100,000. Now, but what happened now is that your target is to do 4% before you pass the challenge. But so let's say if your daily drawdown is 3%, but there's not daily drawdown on that account, it's 8% flat. Now, but let's go to it and say is your daily drawdown is 3%. 3% of $100,000 will be $3,000. Am I correct? So now when you come and you are trading, so I trade conservatively. So I put 3,000 here. Now, that said, for that, don't even risk how much they ask you to risk on a day. It's unwise. So separate your trading into segment. I know many of us are not learning something from Sonic AI on our tag market. I learned a lot from those guys. They are too crazily risky. Ali was telling me, I say, there are some things where you want to go for. I go for passive income on that Sonic AI, but I look at their trading strategy. They are crazy. They are scalper. Once they hit their target, they are not trading again. But I discovered their risk management is that they come too low, a little drop of water. So now $3,000 is not your total equity, but that's what they say. If you lose in a day, you lost the account. So you now say, okay, why will I lose it at a go? So can I do this? Let me use 5% or 10% of it. So if you are not a high risk manager, you use 5%. If you're an average risk manager, you use 10%. So 10% of this. So imagine you get that signal I just used now. Imagine you get this signal on that, and you want to use 10%. So 1:2 risk reward. What's your stop loss? 14 pips. Let me make it 15 because of spread. Now come here and I say 15 pips is my pips of stop loss. Then you calculate. You say use 2 standard. Now, can I tell you something? Most of you used to be afraid. Say, hey, he used 1 standard lot. The standard lot is not the issue. Where is your stop loss? If the market is very close, compacted, and delivery can be fast, you can even use 10 lots. Hear me? You can use 10 lots. How much am I still risking? Just $300. But you are using what? 10 lots. 2 lots. So with these 2 lots, it's still $300 you want to risk. So good. Now, what is that DCA? The DCA is simple. Oh, now that my lot I want to use is 2, divide it into either 3 or 4 or 5. That's the DCA. So if I divide it, okay, I have 2 lot to use. Let me divide into 4. That means I'm going to enter 4 position. Instead of 1 position on 2 lot, I will enter 4 position in 0.5. If you divide 2 by 4, you have 0.5. So I will divide into 0.5 into 4. So 0.5 into 4 is 2. Instead of 1 bulk entry, I will enter 4 segmental entry. So what will now happen? If I like 2 out of that entry, I will put in my TP1. 1 out of it, I'll put it in my TP2, which means I could come down to look at it like maybe like this support now. This is the support here. That's going to be 1:2.6 or something. And then if I go back to more higher time frame, I can go to 1:2, 1:4, right? That means I've segmented it. So eventually, the last one, I will not put a profit. So if the market eventually travel wide, you will see that now your last position will make more than even the TP1, TP2 has made. But what have you done? Your strategies is that you are first of all protecting your capital. So imagine for somebody who entered the market from here and he used that strategy. 1:2 is what you have taken in 3. So imagine that entry that was done here. Or let's use this guy now. Look at it. And he traveled down to as low as this point. This is 1:5 risk reward. You have divided the point into 3, into 4, 5. Now 0.5, that means $300 divided by 4. So that will be $75 each. So that means $75 times 5. $75 times 5, you know how much that is going to be? So the last one make money more than each of them all. But if the market, so by the time the market travel and take your TP1, TP2, what do? I adjust my stop loss into below my entry. So if the market travel back, I have nothing to lose. Ladies and gentlemen, this is your expose for today. I just want to hope that somebody now have seen where you have been missing it and hitting it bad. Have you seen it now? This is the simple way. Now, this is detail, but can I tell you, have I done this thing in series before? The answer is yes. What now was our problem that we're not getting it right? We do not go back to them. In fact, I forbid some persons at a point and say, you are not supposed to trade in your first 3 months. Go and check every subscriber of the scanner, you were added to PBS Club. So when you are added to PBS Club, there's a place there they call Trading Academy. We have what we call 90 days challenge. I know what Aliyu was telling everybody the other day. He said, hey, if you're on this forum and you didn't even go through anything, if you don't go through day 16 of the 90 days challenge, you are missing a lot. He said, because there was so much clarity. Why? Why do we keep 90 days challenge? We say when you buy this scanner or you join the PBS Club, very simple. You are going to be trading. But we say, okay, you can put, some of the copy system. And I now gave another solution. I said, instead of you trading much money of your personal money, that you can buy pay later challenge account. Like what? Get leverage. How much to buy any account from 5,000 to 15 to 150,000? It's just $8.8. Let's call it $10. So you now have your capital extent. There are two major brokers we're using, capital extent and well trade. If you are listening to me and you do not have, go and open. It's very important. Now that your personal money will be on them, then while you try your experiment, for the first 90 days, be learning and be applying. The first month talk about clarifying misconception about trading and all of that concept. The second one talk about mastering those tools. And the third one is like continuing to spread and diversify. And then the first day you start, you're supposed to have copy trading. Some of our copy trading, because of activities and all of that, had not been functioning so much. And I told a lot of people, I say, relax, it's going to function. But I'm not going to announce it. But I know that I have a word I kept aside for some persons, even no matter what happened, that because now the AI tech will be doing it. Oh, we have copy three copies. Copy 1, copy 2, copy 3. Now, the one that I've experienced not move since all this while is the one of capital extent. Then the well trade, to an extent, some things are happening there. But the AI tech has been doing their nice job. When I said the first 90 days, when you have it as they are moving, that in the 90 days, when your 90-day closes, that's when you are supposed to make your first withdrawal from AI tech, from any other one, whatever thing you must make. Then you begin to spread, and then you have equity to now trade professionally instead of struggling. You will see more clarity than what you were struggling. Trust me. And so that is the summary of the whole thing. I have somebody who had been trading. He told me, sir, I've never made this type of money in my life trading forex. I said, well, maybe you should tell it to other people. What differentiates him from some of us is that he settled down to pay attention to what really matters. I'm sure today had actually clarified us a lot. You can see that the people who appreciate watching this training are those of you who attended this meeting. No matter how long you want to capture something. This is our first day. Lie, it's not possible that we're going to go this length again. Next Saturday, we'll not go this length. We'll pick one thing, clarify it and move. We'll pick one thing, clarify and move. And that's the simplified way, irrespective of especially on currencies and all of that. On gold, I go down to as low as 1 minute. That's why you see, when I take some trade, my stop loss on gold, you see very tiny. What's happening? I go down to 1 minute. But I will have waited for the signal either on 4 hours or 1 hour. Sometimes if you cannot find the signal on 4 hours or 1 hour, you could go to 30 minutes. Now, when you go to 30 minutes, you can scroll down to 5 minutes, 3 minutes. You are going to, especially on gold, because sometimes you are waiting for 4 hours and 1 hour. It won't come. And it will have moved severally. Like this last week. That was what happened to a lot of people who didn't see. Now, look at this. This is 1 hour. Did you see any signal? No. Only the last one that have been given, because the market is just within a range, chopping. But money was moving because gold has so crazy volume. Then you step down to 30 minutes, you are going to see a signal. As you go down to 30 minutes, you are going to see a signal. Look at it. As you go to 30 minutes, can you see? Series of signal came up. So by that, you will have seen this buy. I bought this. And then when you put it and go to 5 minutes, 3 minutes, you will have been able to find your entry into the top. And then the market get rejected and give another signal. On 30 minutes, you go down to 3 minutes again, 5 minutes, 3 minutes, you are going to see yourself. And then you look at it. So you will have been able to be finding buy, sell on gold because it has a crazy volume. This is 30 minutes. If I go to 5 minutes, I navigate my sell or buy into 1 minute because gold volume is big. It's not like currencies and whatever. So if you go to look at it on 5 minutes now, haven't find the signal on 30 minutes, look at it, let it just come up. Now look at it. Now, if you look at it, this signal was not powerful for you on 5 minutes. So you want to go to your 3 minutes. So because this is not a confirmation entry, you can't enter it. Don't miss it. If it's not clear, it's not clear. Don't take it. Once it's not clear, even if you play out, I told somebody one day, if you take an unconfirmed A plus entry, an unconfirmed entry, you take an unconfirmed entry, it now give you profit. It's a bad profit. Hear me right. If you take an unconfirmed entry, but it give you profit, it's a bad entry. If you take a confirmed entry and it give you loss, it's a good trade. Many who don't understand. Do you know why it's a good trade? Unconfirmed entry that give you profit will mislead you later 10 times because it does not have what we call repeated pattern. Confirmed entry, if you lose 1 or 2 of it, it has power for repeating over and again. So you better go for confirmed entry so that when you see, you take it. And I've told you, and I'm still repeating it now, when should I say a strategy does not work? If you have used that strategy 100 times and you fail 100 times consecutively, that strategy is bad. So look at 3 minutes. How many of us will see this entry? You don't need to wait for me for signal if you pay attention to this. Can you see? Very powerful sell. So now that means you're going to go like this, short here. Because you see this candle closes below it, and then your stop loss above this. So this 106 pips. And your take profit, 1:2 risk reward is your first target. This is it here. 1:2 risk reward. You have done 220 pips on gold. If you still step down to 1 minute and it's still going to give you more refined entry, you take it. This is what we are missing. Now, how many trade can I take in a day? It all depends on you, but I don't believe in how many plenty trade you take. It's how many good trade you are able to see. You see 1, you see 2, maximum 3 trade in a day, you should be done. Stop overworking yourself. A lot of people will be on chart morning to night. You are not a trainer. You're not a researcher. You are just a businessman, for God's sake, who want to make money. And you're on the chart all through. It's not healthy for your psychology. So when you're on a chart for more than how many hours in the market for the day, listen to me. When you lose trade, your psychology is going to be affected. You may not be able, when you even see money, you may not be able to trade again. That's the repercussion of being in the chart every time. And that is when you make more mistakes. Take the trade, clear trade, 1, 2, 3. Most time, 1. Many of us are not learning from, Sonic AI. 1 trade, for the day, done. 2 trade for the day, done. If you come by error and the trade is showing a very clear momentum, you can enter. Look at it now. It's not a clear sell because it didn't align with your pattern. So the 3 minutes gave you a clear sell and you sell. That is how you trade. All right. So thank you very much. This is long episode, but I know this is a high detailed training that you have ever gotten. Is that true? So I'm going to unmute everybody now. Okay. So someone says, at what point should you carry out your position sizing? Is it after you have used your ruler to do so? Position sizing is done. Position sizing is the main trade. Position sizing is the first thing you do. You only complete it when you now find risk reward. What is position sizing? That is trading plan. First content of position sizing is how much am I trading with? That's first question of position sizing. Is the first thing that anybody must even learn before you trade. Position sizing has to do with your trading plan. How much should I put to the market with this amount I'm trading? Position sizing still talk about your risk management of saying, how many trades should I lose back to back before I stop trading for the day? If I lose 2 trades back to back, worst case scenario, he hit the third one, stop. Don't trade for that day. Forget trading. Go and study. Go and read. Go and play. That's position sizing. That's position sizing part of the trading plan. It is not, so coming here is completing it. Is putting it to work, but you have decided it before. Many people ask me a question, because if you do not have how much you want to put on the market, you can't determine your lot size. Okay, I've just told you, I'm trading with $500. You have decided fixed amount, not percentage. Many say, only risk 1% of your equity. That's a lie. It's not universal. Okay, let's use 1% of your account. Look at it. You are trading with $10. 1% of it is $1. What can you trade? Okay, you are trading with $100. 1% of $100 is $1. Something like that. 1% of $100. Yeah, so 1% of $100 is $1. Is it applicable? Now, you are trading $1 million. Okay? 1% of $1 million. Can you put it in the market at the same time? So you have just to say a portion of my equity. I'm trading with $500 per trade. I will expose $50, or per trade I want to expose $20. So if that is the case, you now check what is the percentage of that $20 in my account. So when you now do this measurement, you now see your stop loss size or your stop loss pips. So if you look at this stop loss pip now, 106, then you now go into this and say my trade, I'm trading with $3,000. Okay, if it's your personal money, so you are trading with, so you can just say I'm using 5%. So 1%, 5% will be 150. Then how many pips? This is gold. Gold is broader than other currencies. There is 110 pips. You say you can use 0.13. Then you now divide it if you like. If you don't like, just want to enter straight, you deliver, you go away. You may not DCA. You DCA because you want to trail other portion. You don't DCA if you are not trailing any other portion. You just want to get into the market, pick the profit you want to pick, 1:2 risk reward. No DCA, just put it, yours truly, and let everything be, no problem. Now, look at this market now. 30 minutes give you the sell. Now, look at it, say buy again. Now, it was just inducing you. And so imagine if you have taken your trade, all of these shenanigans is doing, you're already out of the market. And that's the simplest way of this. I hope that has answered your question. So position sizing has to start with how much do I bargain to put in the market? Okay. All right. So that is the simple thing. Somebody is asking a question. So please ask your question right now if you have any other additional question. Now, one of the good things, so there's a good news I want to give to everybody. Now, those of you who are new and you joined the class today, all right. Now, somebody asked early when we start, how much is the scanner? The scanner yearly is $200. And then once you subscribe for $200, you are added to the group, right? And I've tried to separate some things today now, that there's a WhatsApp group for only scanner users. Then you can still be there, because I see that people abuse opportunity, because we give opportunity for people when you're subscribed for scanner, you have access to Signal, you have access to portfolio building on stock market, both local and international, you have access to portfolio building in crypto, you have access to so many other things, but people are not even using it. Okay, so that's one of the issues. So you have access to all of these things, and then training. So these are part of the thing. So the scanner costs $200 per year. Now, if you're on this call, we just finished a promo of 50%, and that was over. If you're on this call and you're ready to take the scanner, maybe today, tomorrow, or something, whoever invited you, you need to let us know who invited you, because the scanner will pay what we call affiliate commission to whoever invited you. 20% of the subscription fee. So take note. That's why we need to know who must have invited you. Now, anyone who is subscribing because you are on this training, instead of $200, you are given privilege to pay $150, not $200. Don't tell anybody. Now, I need to stop this recording, please.